Alright, good afternoon everyone. Today is Thursday, July 17th, 2012. Let me start right out with the results, okay? We are break-even on the ES. Break-even on the ES. We are up a little on the NQ. We are up on the YM. We are just about break-even on the crude. We've got -1 tick there because we slipped a little bit. And that was it, right? ES, NQ, YM, and the crude. That is it. Those are the results in the morning. Now, let me go over the trades that we took and that we didn't take and all that. On the ES, I'll start right out with that, okay? Because everybody likes the ES. Well, not everybody, but a lot of people like the ES anyway. You can see it in the liquidity of the actual market. Option, that number that I just said, less than $6 should be all you be paying. 6 or under. Okay. All right. Right here, we have a weekly trading zone right here. That one that Dwayne was talking about. Okay. We had a bearish cross pull back up to it. I wasn't going to short right into it, but right there was the spot to do it. We had something else going on right there as well. Right there, we had a bearish cross, a pierce of a red envelope, which is bearish, by a green trend strength line. All right, that suggested at this point that it was going to move 5 to 6 points down. It actually only moved 4 points down. Right? It had suggested, well, it pierced it here. No, somewhere in this bar right here. It pierced it. We'll say 70, and it suggested it was going to move down to 65. It only got down to 66. All right. After that, it pulled back up right here, and we took this short, and it stopped us out to the tick right here. It stopped us out to the tick, and then it went on down here to this area right here. That was plus 1.5 from my entry. All right, plus 1.75 from some other guys' entries, but plus 1.5 from mine. From there, it went back up through the weekly trading zone, and we got long right here, right at the end of the morning session. Okay. Now, this was a 2-point stop out, and on this one right here, we had a 2-point target. Now, worth noting, and I pointed this out in the room this morning, right here we had a pierce of the envelope, and the pierce of that envelope was right in here, we'll say it's 70. So that suggested it should get up to 75 to 76, okay? And I told the folks when we entered into this trade over here, I got in, I believe I was in at 70 and 71 and a quarter, something like that. Where was I in at? 71 and a quarter, I think I was in on this one. And I took profit up here, okay, with 2 points profit. All right, I had a 2-point stop. It went within a tick of my profit target right there. Then it pulled back down. Then it went back up, and I took profit right there. Okay, but I had suggested to everyone at this point, because of the pierce right here, it should get up to 75 or 76, and you see it just got up to 76. Okay. This pierce of the envelope right here gives you some range, so you can base your next trade profit target on that. All right, like over here, we thought it was going to get down to 65, 64. It dropped all the way down to 66. If this one had gone down and not stopped me out, I would have been looking for that. All right, I would have been looking for it to get down here to 64, but it stopped me out to the tick. This one over here, you know, I put the long on right at the end of the morning session, and I just let it go. Okay. And I came back and we actually went through the profit target right here while Dwayne was speaking. Okay. Oops. Hang on. I don't see who that is. Okay. And that was our ES trade this morning. All right. That was the ES this morning. Now, if we come over here and we look at the crude, there were quite a few opportunities on the crude this morning. I didn't take all that many. I took a few. All right. Let's see. We started out here. I missed this first trade here. Now what we're looking for on the crude, now watch as we go across all these different markets. A 4-tick range. We're going to be doing the same exact setup with the same indicator set on all three of these, on all the next 3 markets that I show you here. All right. We're going to go from crude to the YM to the NQ. Right here we had a bullish cross with a pullback down to the BBC with bullish divergence. Okay, the divergence is when the green line is headed down and the red and blue portion down here in the slingshot, which is a cycle, when that's heading up. All right. So what you expect is it's going to find some area of support, which is the BBC, the green line. And once it does that and it starts moving in the direction of the cycle, then you want to get long. So an up close is what you're looking for. Right there was the entry, and up it went. Okay. It got kind of mixed up in here. The MA1 was on the top side of the BBC, and the divergence was bearish. It turned around in here. We had a cross down below the BBC, suggesting to start looking for shorts. Now, I don't want to confuse people, but everybody that was in the partners meeting last week, you see how you could have entered that right here, right there, okay? For the ride all the way down. But for everyone else, it pulled back up to the BBC right here. Gave a down close. We had some bearish divergence at the time. I took the short. It stopped me out for -8 ticks. Okay. The next trade was over here. We had a bullish cross suggesting we'd start looking for longs. Pull back and tested the BBC. Sorry. We had bullish divergence right here. Looking for the up close. There's the up close, and it went up. There was another opportunity right here where it pulled back to the BBC and gave the up close, and another one over here where it pulled back to BBC and gave the up close. Any one of those right there, guys, you could have gone long, okay, and it would have been a valid trade setup. Or all of them, for that matter. You could have gone long, and it would have been a valid trade setup. Over here, on the other side, we had the bearish cross. Right here we had a bearish cross, and price dragged the MA1 down below the BBC. It pulled back up to it, tested it, and it gave a down close. I shorted there, and I took some profit down here. All right, it flipped around, and over here we had bullish divergence with a bullish cross. Came down, tested the BBC, gave an up close, and I took that long trade there and took some profit. Over here I took a long trade again, and I stopped out on that one. Now right here we were getting into the break. We had some bullish divergence right here. Alright, bullish cross, tested the BBC, up close with bullish divergence. Same thing here. Tested the BBC with an up close and bullish divergence. Now over here the divergence is going away. You see the cycle's going against you, so there's no trade in there. And then we start getting into the afternoon session right here. This is when Dwayne was talking right here a few minutes ago. We had a bearish cross, tested the BBC with a down close, and we had the bearish divergence down here. Okay? This right here, this thing right here, I'm pointing this out. Part because, well, for the partners that were in the meeting last week, you know why I pointed this out. You could have entered the trade right here for the move up. For everyone else, you didn't get a pullback until over here. By then, you were starting to lose the divergence down here. So I wouldn't have traded that right there. What we have going on right now, well, we have a bearish cross. We have bearish divergence. We need a test of the BBC with a down close. Okay, that's what we'd be looking for right now on the crude oil chart. Note that we rolled to September crude this morning. Okay, this is September crude. All right. So I did the ES. I did the crude. Now I have the YM and the NQ. Okay, let me show you this is the NQ. Now we're up a couple of ticks on the NQ right now. 5 ticks I think on the NQ, right? Let's see, the market started right here. We had bullish divergence, tested the BBC with an up close. You see the same indicator set, same exact trade setup, the same everything. Different market, but the same everything. And this is what we talked about yesterday. All right, tested the BBC with an up close, and it went up. Again, right here, tested the BBC with an up close, and it went up. I actually took that trade. Tested the BBC in a down close, and it went down. Here we have a test of the BBC, but we don't have any divergence. Here we have a test of the BBC with the bearish divergence. This was right on in a high-impact news event, so I wasn't doing anything in here. That's why you don't see it highlighted. But the trade setup was there. Okay. Now in here you might say, well, there's bearish divergence, and it tested the BBC and gave a down close, but we had too many closes above the BBC. Even though it worked out, I didn't like the trade. Now I'd like it to really be like this. This is more what the the ideal trade would be like. Okay, you have the bullish cross, a test of the BBC with an up close. It doesn't close too many times below there, below the BBC. Okay, you have the bullish divergence and up. And there was one right here that didn't go anywhere. At this point, I'm not sure why I wasn't. I might have been in a. Well, that didn't actually test the BBC until the cycle was totally against it. It gave the up close over here, and the cycle was too far against it. I was saying I must have been in a trade at the time. That's why I didn't do that, but it didn't do it because it didn't meet the requirements. All right, bearish cross, test to the BBC, down close. Again, right here, the cycle's moving up a little bit right there, but you still had the bearish divergence with the down close. If you had 8 ticks risk on this, you were still in it for this move down right here. Okay. I had circled this, but the cycle was going up too much. I had circled it when before the cycle started moving up against it. Now right here you had bullish divergence, test to the BBC with an up close. Again, right here you had bullish divergence with the test to the BBC and an up close. That one didn't go very far, 3 or 4 ticks at most. Let's see. Scrolling over, there were a couple more in here right at the end. Right now you can see the cycle portion of the slingshot is headed down too far to be going long right here. Okay, so you wouldn't be looking at that. That was the NQ. Now you saw that we had the same exact indicator set and we were doing the same thing on the crude and on the NQ. Now let me throw up the YM here and you'll see the same thing there too. Okay. Let's see, the market opened up right here. Alright, we had bullish divergence here, we had a bullish cross, but we had too many closes down below the BBC to go long on the up close, so we waited. We didn't do anything there, or there, or there. Here all these arrows are backwards. Here we had bearish divergence and a test of the BBC with a down close right here as well. Now I'm thinking, let me look at the larger time frame here for just a second. It's at 60.65. I'm just going to put that on here, okay? 65 and 60. Now we have a weekly trading zone right there. That's why I wasn't looking to get short in a lot of these places. You can see it was going right into the zone. But over here, for those of you who were in the partners meeting last week, you could see a couple of places in here where you could have gotten short. One was right there. Another one, well, I should, hang on, let me just, give me just a second. I'm trying to use the thing that's on my, there you go. One was right there. Over here, it would have been up here. Okay, when this green line turned down, when the brown was below a strong sloping cycle, you could have gotten in right there. The stuff that I'm talking about right now, for everybody who's listening, you don't need anything on price. You don't even need to look at price. I had actually traded it last Friday when price was like that. I traded it strictly from the slingshot. Okay, I did that on crude. I didn't do it on the YM, but it transfers to YM. Okay, but there was an opportunity right here, bearish cross, test to the BBC, down close, and there it went. Okay, right in here, there was nothing because it was going right into the zone. In here, it got choppy at the zone. In here, we didn't have a pull away from the BBC, so we didn't end up with a trade there because it didn't pull away. Alright, right in here, the cycle was moving down, so we didn't look for anything there. Here, again, it was going into the weekly trading zone. We had a lot of issues here with it going into the zone. Right here, I shorted right here, and it went right up into the zone. Okay, so I lost on this one. The cycle was moving up against me when I took the short, so it wasn't the optimal trade, but I took it anyway, and I lost 8 ticks on that. And over here, I put a couple of contracts on, and I got my 8 ticks and then some back over here. Okay, when it tested the BBC and gave an up close, then I got right back in the money there. Okay, let's see, it got really choppy in here, and we didn't have any trades, and that's pretty much it. Right now you can see we have a bearish cross, and we don't have any divergence yet. But if it were to pull up and test the BBC and give a down close, that would probably give us a short indication because we would probably get some divergence with that pullback. Okay? Now that is how you trade all those markets using the same exact trade setup, using the same exact indicator set. You can do it on the same time frame, you can change time frames, you can do whatever you want to do with it. Alright? I don't see any questions in here that I haven't answered, I think. So that's it. I'm going to wrap up my recording right now.